The real estate market is broken, or at least that's what everybody is telling you. High prices, 8% inflation, rental rates lagging behind inflation makes it feel like it's impossible to cash flow, right? Wrong. Sorry about that, didn't need to put on my dad hat, but in this video I'm going to show you how all of that doesn't matter. I'm gonna give you tips to cash flow in 2025. I've built a $50 million rental portfolio all without using any of my own money in the past 10 years. And I'm here to tell you that you need to be able to buy rental properties that cash flow in any market if you want to create any semblance of financial freedom. You can't only take advantage of the perfect market because guess what? Everybody else is doing the same thing. You need to understand, be connected to, and listen to people that have figured out a system and a process that works through any market cycle and are adaptable and adjustable and give you the sauce, which is exactly what I'm doing in this video. In this video, I'm going to talk about how to maximize rent, how to secure better financing, and how to self-manage to boost your profits. Stick around throughout this entire video because I'm going to give you real examples and strategies that work in today's market that are proven. Option 1, flexible tenant strategies. What does that mean? Well, that means most people go into looking to buy a rental property only thinking that they can get a 12 or 24 month lease at market rent, and they run their numbers and they crunch their numbers and they see that they don't necessarily cash flow because of the things I talked about earlier, the higher prices and the higher interest rates, and rent hasn't really caught up with inflation recently, meaning it costs more to live, it costs more to own, every other expenses that all your tenants have are more expensive, but rent hasn't gone up as much, so it doesn't allow you to cash flow. The beautiful thing about real estate is it allows you to be very agile and allows you to bob and weave what the market is throwing at you. I've already covered what the market is throwing at us now, so here are some tenant-based strategies that can help you. You can potentially rent out your property on a short-term basis. Now, of course, it depends on the property location and the city and state that you're in. However, a lot of places that you might not think you could do a short-term rental, you can do a short-term rental. That is putting a property on Airbnb or VRBO and renting it out by the night or the week. That allows for much more cash flow. Now, of course, there are more expenses like furnishing and management. However, you should net about 5 times the cash flow on a short-term rental that you would on a long-term rental. So yes, the expenses are greater, but the income's a lot greater as well. So if you do a good job managing this property and turning a property into a short-term rental that you might not think could be a short-term rental, again, of course, assuming the city allows for it and it's in a decent enough location, this is an option to allow you to get 5 times the cash flow. So if you run your numbers and you're breaking even or negatively cash flowing on a long-term rental, you could potentially turn that into a short-term rental and cash flow several $100s net, which makes a no deal into a deal. Another option that is not talked about very much is mid-term rentals. Everybody knows about short-term rentals because they've been around for a long time. Mid-term rentals have not been around that long. Getting into the mid-term rental game right now is like getting into short-term rentals 10 or 15 years ago. Mid-term rentals are properties that you rent out on a mid-term basis, hence the name, but you rent these things out for 30, 60, 90, 120 days to people like traveling nurses, people with corporate leases, digital nomads, or insurance displacement contracts. You might not think that there is a demand, but I promise there is a demand. For example, there are about 2 million traveling nurses in the United States, and go to furnishfinder.com, which is the #1 place where people list midterm rentals. There are about 200 to 250,000 available listings, which means 2 million people are traveling as nurses and then they need somewhere to stay. Of course, some stay hotels, some stay with relatives, but there's a big demand out there, and the supply is about 200 to 250,000. Meaning if you have that supply, you have something that is in demand and you can charge more for it, and they do, especially with traveling nurses. They're on contracts and their employer is paying for their rent, so they don't mind paying a little bit more to have a nice place to live that's by the hospital. That doesn't even mention corporate leases or digital nomads. There are a ton of those as well, and midterm rentals are great. Very little management, very little maintenance. People come, stay there for a few months and then leave, so you have 3 or 4 tenants a year. It's not that bad. It's not near the management headache that short-term rentals can potentially be. And then lastly, you can go the long-term rental route that most of you think of when you think of rental properties. You can do a 12 or 24 month lease. Now you are going to get lower net cash flow because you're not going to be able to charge as much. However, it's a lot easier to manage and you usually don't have to furnish the property. Now you can go market rent. rent, listed on Zillow or the MLS with an agent, or you can go Section 8. Again, it's all about the tenant base you're going after. Section 8 is not really that difficult. There are Section 8 authorities in your area that will walk you through how to do the process and inspect the property for you. So I know a lot of people online are saying they're Section 8 gurus, and they may know a little bit more than most about Section 8, but just know Section 8 is not that bad. Option 2, flexible financing strategies. If you can get better financing terms, it can make all the difference. Most of you out there looking to buy rental properties are probably going to be going to small local banks, and they're just not as attractive right now as they used to be. For example, small local banks right now are typically going to give you 20-year mortgages at about 8%. That's where it's really tough to cash flow. When your cost of capital costs you that much, it's really tough to squeeze out any positive cash flow at the end of every single month. Now you can try to negotiate with your small local bank and potentially go from 20 to 25 years, which will make a difference. Or you can get into something that is a little bit newer into the space, and that is DSCR lenders. DSCR stands for Debt Service Coverage Ratio, and that is basically a loan that is not funded in the same way that a small local bank will fund your loan. They mainly look at the performance of the rental property, hence the debt service coverage ratio. If you're able to collect enough rent that covers the debt, services the debt, and there's a formula that these lenders will use, then you can get a loan without having to go to a small local bank. These DSCR lenders can be much more aggressive, and in fact, I have my own national DSCR lending company. Let me show you an example of a deal, how going with a proven DSCR lender can completely change the game for you and allow you to buy rental properties that you couldn't buy anyway. Let's say you have a $200,000 loan and you go to a small local bank and you get an 8% loan over 20 years. That monthly payment will be about $1,668 a month. If you go to a DSCR lender, at least if you go to mine, FasterFreedom Capital, we will do 30-year fixed rates, which is something I didn't even cover. The small local banks are going to give you 3 to 5 year ARMs, meaning the rate will adjust in 3 to 5 years. But if you go with a DSCR lender like my company, you can get 30-year mortgages at 6.4 or 6.5%. I'm going to do the math, but you can imagine if it's taking you 10 more years to pay something off and your interest rate's 1.5 points cheaper, you're going to cash flow much more. And this is a great place to start. You may be thinking it's going to take me longer to pay it off. Well, you can always pay it off earlier by paying extra principal every single month. This just gives you the flexibility to not have to pay as much when cash flow is a little bit tighter like it is now. If you get that same $200,000 loan over 30 years at 6.4%, your monthly payment is going to be about $1,264, which if you do the math, and I'll have a calculator do it for me, carry the 2, all the fun things, minus $1,264, that will save you $400 a month just because you got better financing terms. This isn't even assuming that you go short-term or mid-term rental. This is just assuming you're going with everything else that you're doing. Your purchase price is the same, your tenant's the same. Just your cost of capital costs you $400 less a month. If you don't see the impact in that, I don't know if I can help you. That is huge. And again, if you're interested in using my National DSCR Lending Company, just check out the description or go to FasterFreedomCapital.com and get a quote, and we'll help you out if we can. Same deal, same house, you're just not overpaying for funding. Option 3, self-manage for more profits. Now, self-managing your own rental properties is not for everyone, but I do want to let you know it's probably not near as bad as you're thinking if you've never done it. For example, if you have one rental property, I'm pretty confident that you can manage that rental property properly by spending about an hour a month. And if you have 2 rental properties, you can manage that pretty effectively, maybe in about 2 hours a month and there. If you do things the right way and have a good property and you approve a tenant properly, you're not going to have to talk to a tenant every single month. You probably will talk to your tenant 2 or 3 times a year. So it won't be that bad. And there's software out there that helps you credit check, background check, manage the tenant properly, keep track of maintenance requests, keep track of the financing, and everything all done within the software. The only thing you'll really have to do is make sure you have people that you can call to do the maintenance if something happens and you can't fix it or there's an emergency. You have to have a few different contractors you can call to go over there and look at it and do the work. Now, if you're doing real estate already and you're already an investor and you flipped before or have other rentals, that shouldn't be a problem. I understand if you don't want to manage the tenant and deal with that. This is just an option because most property management companies are going to charge you about 10% of gross rent collected. Meaning, if you get $2,000 a month rent, they're going to charge you $200 a month just to manage that property and probably rarely ever talk to the tenant. In addition to that, they're going to upcharge their maintenance. Maintenance maybe costs them $50 an hour, but they're going to charge you $75. Also, most property management companies will charge you lease-up fees, so you're going to have to pay them additional to get the property leased. Now, a good property management company, if you don't have the time or the personality to do it, is worth it. But just know it's not really that hard to manage with technology today, and you can save a lot of money by doing it in-house. The market will never be perfect. I hate people that speak in absolutes, but I can tell you this as an absolute. It will never be a perfect market to invest in real estate. If financially things are making it easier to buy and own real estate, there's going to be way more competition and you're going to have bidding wars. If it's a little bit harder to cash flow and buy like it is now, you're not going to have as much competition, but the environment isn't as easy to buy and cash flow and make huge profits. So no matter what you do and how you choose things, you're never going to be fully right. It's not about timing the market, it's about time in the market. The sooner you buy rental properties, the sooner you get into the game, the sooner you will cash flow. Wealth is a numbers game and a time game. If you wait 5 years to invest in real estate, you are literally throwing 5 years of wealth building activity down the drain. So what you need to do is you need to figure out a strategy for you. Follow somebody, hopefully you're following this channel on here. Make sure to hit the like button and subscribe if you're not, and get real advice from real people that are actually doing what you want to do. Make sure to check the description to get hooked up with my capital company, FasterFreedom Capital. We do fix and flip loans as well as long-term financing. Also, there's a free training inside the description. I don't collect your phone number or your email address. It will walk you through how to invest in real estate using none of your own money. And of course, you'll get the opportunity to book a call with my team to learn about my community, but that is just an option for you. Get the training for free and see what you think. Hopefully you enjoyed this video. If you did, make sure to hit that like button, subscribe. I will see you on the next one, and check out this video over here where I walk through the BRRRR method and teach you how to invest in real estate using none of your own money. See you on the next one.